The busy spring buying selling season has been flipped on its head in Southern California. Inventory is going up with no slowing down. And speaking of slowing down, we're seeing that happen in the median home price. We are going to run through this and more in the Southern California Housing Market Report. And away we go. We got a lot of ground to cover, starting out with the single family numbers in Orange County. And we're looking at April's from 2025 all the way back to 2018, 2019, normal times for the real estate market. 2020, that was the first full month where we had lockdowns for COVID. Then things got crazy through 2021 and beyond. Flattened out in 2023, and they've been flat since then. We're showing you the sold properties, so that's old news, properties that went under contract and have closed in those Aprils. We're looking at properties that went under contract into escrow. So those are properties that will be closing theoretically in anywhere from 0 to 45 or 60 days. And that is buyer demand. So buyers writing offers. And then we have new listings. That's seller supply, sellers deciding they need to sell. And don't worry, we're going to look at total inventory, not just new listings when we get to the Altos Research Reports. Some very interesting stuff in those numbers as well. The other piece of data we have here, that black line, that's the mortgage interest rate. The average of that rate for the April is going all the way back. And we could see that rates obviously dropped during COVID. 2020, they dropped very quickly to 3.3. And then by 2021 in April is down to 3%. Crazy low numbers that most likely we won't see again anytime soon, maybe not in our lifetimes. And they've gone up since. And we're actually down slightly year over year. Last April, mortgage interest rates slightly higher. They're down around 6.75 right now, but still high as compared to when we look at more recent times. And when you see that black line, you can see that the inverse of that line, other than 2020, is the number of properties going under contract. And what it shows is that when rates are low, more properties tend to go under contract. Obvious stuff. Moving into Los Angeles, the largest of Southern California counties, the most properties there. You see that big dip in 2020, then the rally back when mortgage interest rates were low. Now we have been flat when you look at number of properties going under contract all the way back to 2023. Year over year, not a massive increase. What we are seeing is an increase in the number of properties that are being listed. Now we're not at more normal levels over 8,000, but we're getting there. If the levels continue to go up, the numbers continue to go up for new listings, that will mean that there's a much larger gap between number of properties under contract and the number of new listings. This is where the opportunity is for buyers. When these are very close together, it's tough for buyers to get a deal because there isn't as much to choose from when they're out there. There's a lot of competition. But as the listings stack up, there's more and more opportunity for buyers. That's when we start to see prices soften. And when we look at median home price, you're going to see something interesting. Looking at Riverside, we see that big gap. We see the increase year over year in new listings and a slight increase in the number of properties going under contract year over year. Not much more than what we had in 2023. So that is what is going to be tougher for sellers as there's more opportunity for buyers to choose. Same thing, increase in San Bernardino in the number of new listings. Again, not at the more normal 2018, 2019 levels, but increasing. Neither are the pending sales at 2018, 2019 levels. So that shows you the market hasn't returned to any semblance of normalcy. Ventura, always marching to its own drummer. Yes, it has been increasing the number of new listings and dropping in the number of pending sales, even lower than 2023. San Diego, same thing. Big gap between the number of new listings and pending sales. Not a strong rallying in buyers out there. This is the time of year where buyers should be out there buying, and we're just not seeing it. Especially nowhere near normal levels of buyers writing offers that we had pre-COVID. Taking a quick run through the multifamily numbers, one of the only places you're going to get this data as well for Orange County. Look at how dramatically the number of pending sales dropped in 2020 down to 11, and it was because nobody knew what the heck was going on. Mortgage interest rates were low, so that was helping properties pencil. That's why we see 11 properties going under contract, and then 2021 we have almost 100 properties going under contract. We haven't seen those levels since. When you have a 3% mortgage interest rate, it tends to make it easier for a property to pencil. The cash flow, which is going to be the income minus expenses like property taxes, insurance, maintenance, etc. Then you take that net operating income and you subtract the debt service, which a 3% mortgage payment's pretty darn low. What's left over is cash flow. So properties were cash flowing like crazy. Not so much when mortgage interest rates get to 7 or 6.75. Actually, relatively strong number of properties going under contract, not too far off of more normal years, but not like 2021. We won't see that probably for a while. And then an increase in the number of new listings, close to what we had in 2018. Not as out of whack in the multifamily numbers in Orange County like we're seeing in the single family numbers. Just to give you a quick anecdotal story, I just listed a property in Costa Mesa with 22 units. We were at a 5% cap rate in place, which is a good value for a buyer actually in Eastside Costa Mesa. List price was 9.5. We ended up with 5 offers and it got bid up over list price. Just put it in under contract, so now we're doing due diligence. I'll keep you posted on that. Moving into Los Angeles, had a huge eviction moratorium during COVID, so it's tough to get renters out who weren't paying. So it's tough to convince people to buy a property when you have non-paying renters. But still, sales happened. We saw the numbers rally for properties under contract in 2021. Not as crazy as the other places that didn't have as strict eviction moratorium in place. We can see new listings are up, so back to more normal levels. Pending sales slightly low, and that's a function of mortgage interest rates for sure. Moving into Riverside numbers, so we can see nothing crazy here. So number of new listings is pretty close to some other more normal years, although 2019 listings went through the roof. And then pending sales not too far off of more normal years. And again, a function of mortgage interest rates. This tends to be a market that is going to give a higher cap rate for buyers. So that means a better return on investment. And we were seeing a big increase in the number of new listings, but it looks like that has tapered off. So while a few times I was wondering if we were going to start to see big price reductions in Riverside, now with inventory increases slowing, that should stabilize. San Bernardino and Riverside, a lot in common as far as the type of renter who rents and the type of cap rates that a landlord can sell for. New listings are down as compared to more normal years. Pending sales, pretty flat, a little lower than normal years, but nothing crazy. Another one where we were starting to see an increase in new listings, and we were starting to wonder if inventory would start to stack up, but it doesn't look like that's the case. Ventura, you're always all over the place. A few buildings trading. 2019 was crazy in some of these counties for listings. San Diego, so we've seen a strong number of properties being listed, and we are at more normal levels of new listings. Pending sales pretty close to more normal levels as well. If you're digging this data, you're our kind of people. Don't even think about buying or selling in SoCal without reaching out to us first. Median home price madness, more fun with numbers. Let's dive in and take a look. So first things first, we're looking at month over month. And we can see that for Orange County, it is flat. So same number, 1215 month over month. LA, we had a slight drop. Riverside is very flat. This time of year, it's supposed to be the busy season for buying and selling, and we're supposed to see prices go up, and we're not. So it is very flat, if not going the wrong way. And then looking at year over year, we can see 1.3% year over year increase for OC, LA 0.6%, and Riverside is 0%. Values haven't gone up year over year. Now, these numbers are not outpacing inflation. When you have inflation numbers of 3-4% or higher, we're not outpacing inflation. So these properties theoretically have actually lost value year over year. And when we look back at median home price madness, that we've been doing these reports for years now, we had numbers 10, 12, almost 20% year over year increases. Those are gone. We're supposed to be seeing an increase year over year right now in this busy season. We're not. Based on the trend here in the median home price, we're potentially going to go negative again in the year-over-year prices, which we saw in the last peak. Year-over-year, we were negative, and then it rallied back slightly. But with mortgage interest rates as high as they are, and now an increase in inventory and buyer demand staying flat, this is where prices start to soften. Yes, even in Orange County, where people say prices never go down. And more median home price madness. So we can see that month over month, we actually have a slight increase for San Diego and a slight increase for San Bernardino, Ventura went up somewhat significantly. Their line is much choppier just because there's fewer properties that sell, so it tends to skew the data faster and move the median price around more. So San Bernardino, which was negative many times actually, relatively recently for year over year, is up 4.7%. Ventura is up 3.5%. San Diego's down 0.5%. So yes, moving into negative territory, which is pretty shocking for this time of year. But again, mortgage interest rates, increasing inventory, and stable buyer demand. No increase there. It is leading to a softening. There's your madness right there. More of my favorite Altos Research Reports. So much information condensed in here. And if you're still watching, you're my kind of people. You love data like I do. And don't forget, you can subscribe for these anywhere in the nation. So don't just feel like you got to be stuck in SoCal. Anywhere you want to track, sign up for it. So starting with Orange County. And one important thing to point out, and you'll see this as we go through these quickly, market action index is stable or backwards, which means it's becoming more of a buyer's market, which is not supposed to do this time of year. Typically doesn't happen. Next important thing we're looking at is inventory. Now, the inventory has gone up, and it's a huge increase, quite frankly, in the amount of inventory. And we're seeing here that it's not a record. There were other points in time, and in 2020 at this time, there was more inventory on the market, but it's increasing. When we come down here to the market segments, we're seeing something that shows that the market is going to potentially swing more to a buyer's market. And that's when we look at the number of new listings in the different quartiles for the market and the number of absorbed. When you see that the number of new properties versus absorbed, if the new is higher, that means inventory is going to start to stack up. And you can see here that in every market segment for Orange County, we have fewer properties being absorbed than new listings coming. So that is a trend that we're not used to seeing, which means inventory is going to start to stack up. One more important thing to show you here, you can actually look at condos. So we've been looking at house data. Take out, in my opinion, the 90-day average. Because what happens with the 90-day average, that smooths it out too much. We want to see what's going on this week. So we're looking at the 7-day average, and we can see a similar case where there's an increase in inventory for condos. So make sure you check that. When you subscribe, you can compare houses versus condos in the respective areas you're searching. Moving on to LA, we can see that market action index is backwards. Look at inventory. Inventory is higher at this point than any of the dots, which are year over year, going all the way back to 2020. This is the highest level of inventory we've had in Los Angeles for houses. How about new versus absorbed, like I was talking about? Same thing. More new properties coming to the market versus absorbed, other than the bottom quartile. We had 289 new, 338 absorbed. Usually what we see when we run these numbers, almost any time of year, we see more absorbed than new. So this shows us things are going to start to stack up. And it's also important to understand that they may stack at different rates depending on price point. Riverside market action index has not moved up like it should this time of year. Inventory up, new versus absorbed. Bottom of the market, so the lower half of the market, more being absorbed than new inventory, but the top of the market, not the same. There's more inventory stacking up. San Bernardino. Market action index backwards, inventory up at a record level, hasn't been this high. And new versus absorbed, bottom of the market, bottom half of the market, just like Riverside, they're more being absorbed, but top of the market, it's sticking and stacking, I should say. Ventura, we've gone backwards for our market action index. Inventory's up. It was slightly higher back here in 2020, about 5 years ago, but still at a high level, new versus absorbed. Now here, we can see that the top of the market, there's actually more that were absorbed, 2 more than were listed, but that's not a strong trend. That could change again in a week. San Diego used to be 100. I know I always say that, but this number was literally 100 for the market action index, which means like the most pure seller's market you could have. That's gone backwards. Inventory's up, not as high as it was in years past, but still pretty darn high. And new versus absorbed, fewer properties being absorbed, more new ones stacking up. Make sure you subscribe to the Altos Research Reports. As an added bonus, you'll get our free weekly email newsletter where we cover updates like this, plus a whole lot more that you need to see, such as this next video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to help you.